So going into our mastering of what we call the trigger day. The trigger day. If we master the trigger day, we can understand what daily bias is. And most smart traders do. They heard of daily bias and they've tried to master daily bias, because daily bias gives us the idea of what mindset we should do when we come into the market. I propose that mastering trigger days is the best way to understand daily bias. Now, there's multiple types of trigger days. There's 3 longs. So you got day 1, day 2, and day 3 breakouts of longs. Day 1, day 2, day 3 breakdowns of shorts. When you that day 3 of the breakout of shorts, you want to be looking for on the daily time frame. This is how powerful it is. If you're looking at the daily time frame, you want to look to see if the daily time frame is moving into an old support or old resistance, or a high or a low, or short-term high or short-term low, or 50% or 618, or some type of supply and demand area, inefficiency area, in which it would cause the market to go back out of imbalance. So the trigger days are powerful, as you will see if we look at CAD and just look at the last few days. Here we got, here you check this out. This is day 1. This is a Wednesday. This is day 1. Day 1 longs in the market. Day 2 longs in the market. Now day 1 is actually a trigger day. This is something that we're not talking about on this video. But this actually is another type of trigger day for us to go in and look for PD arrays, what we call PD arrays, or if you want to call it inefficiencies, or whatever you want to call them. It's a lot of different terminologies in the market. You got day 1, day 2, day 3 breakout. You have this candle right here opens up and closes above this candle. But look where we are at. We are at a critical level. We are at a level here, right? We are at a level here. And now let's put out our period separators so we can understand exactly where we are at. So let's go with monthly levels. So this is the monthly high and low. We are at the high of the month. We are at the high of the month. We got to understand, but we are in a long-term buying trend this year. But we are at the high of the month. So we are in a rally. It pulls back. You want to catch that pull back and catch that long. But because you didn't, we at the end of the month. And it rotates and give us a first red day. It's Friday. You got Thursday, Friday, Monday, Tuesday. Monday, Tuesday sets the high and the low of the week. Monday comes in, it trades inside. Tuesday gives you a short outside of Monday for a short session trade. You could trade that high. But here's your parabolic. Your first red day is your trigger. So when you came into the market after the first red day, you're looking for your setup. You're looking for your setup, and that's where you could throw the moving averages on and say, I'm looking for moving average pullbacks. This was my first red day. My first red day allowed me to have a bias that we could be in reversal. How will we determine if we are in a reversal? Well, we got to use this basic technical knowledge. Here's the breakdown. Let's make it higher highs, higher lows, higher highs, higher lows. We break out. We break down. Here is where we have a breakdown. And remember this line that we made earlier. Not this one. It's this line here. That's the higher time frame supply. So we're at a high of the month, and we're running into an old block. We get a first red day, and we're coming in on a Wednesday, Monday, Tuesday, Wednesday, Monday, Tuesday, Wednesday, breaks down early in the session and gives us a parabolic move at 8 a.m. within our timings windows. And what does it do? Runs right into the levels. Right? There's multiple levels there. There's a fair value gap. And also we have what we call order blocks, right? We call those order blocks. We call those also a supply and demand level. So in there we have a parabolic move, zero stress, zero worry for a parabolic move in the direction of the trade, and it sweeps the high on the lower time frame. You go down to your 5-minute time frame, and now this is where you can add size to your trade because you're ready. You got to break down, you got to pull back and a curl, and it breaks down, guys. Under the moving averages, you can easily get in. You can easily get in here as it breaks down, as it pulls back. Get in there, zero stress for a parabolic move for over 40, almost 50 pips at the top of the range. We had a doubles, we had a 4100s. It reverses at the 4100s and breaks down it breaks all the way down to 435. And this is USDCAD. Powerful, powerful, powerful trigger day.